Chapter 3 is going to take what we know already about transactions and what we know about debits and credits, but we are not going to use a T account anymore. What we are going to use is going to be called a journal, and this is called a multi-column journal. It's called multi-column because we have multiple columns. That's the sophisticated name for it. You like it? So what I want to do first is, before we actually start looking at transactions, I want us to look at this and understand how it works. Okay? So our journals are always going to have these columns, and you will see that we have rows here, and these rows are going to be numbered. Because oftentimes when you're working on an assignment, we can go through and we can have multiple transactions on June 3rd. So I can't say look at your June 3rd transaction because you're like, which one? So I would go through and I'd say look at line 7. And I would look on the line here and I'd say look at your line 7. You have a problem with your transaction on line 7. Okay? So we have lines going across here, and I'm going to look at our columns, and our columns go up and down starting from left to right. So the very first thing that we have here, we have a column for date, and you can see that our date column is split between two different columns. So what you will find is we will use a journal for every month. Why every month? Those numbers are important to us. If I run a golf course, do I need to know how much sales I have in July compared to September? So a month total gives me valuable information about what I can do with the business. So anytime we start a month, we always start a new journal page. Now, right now it seems like a little bit weird because these are kind of like what would be a paper copy, and we've made it electronic. So electronically, you can kind of go down as far as you need. But oftentimes you might find in our example that your journal page ends and then you have to start a new one. But you still need to carry your numbers from one page to the next page so we can have at the end of the month what our sales was, how much cash we received, how much cash we paid out, because that's important information. That's our statement of cash flow, so we know what is going on with our business. So this very first column is going to be where we would write the month. We only have to write the month once on our journal because we're saying this is my journal for October, and everything after it is going to be only for the month of October. And typically we don't go through and write out the whole entire month. We would abbreviate it. So October we would write OCT. Okay? So if you start typing it in, Applia will give you an auto fill in to say, okay, it's going to be this month or that month. July is short enough. We don't abbreviate it. We just write out July. Okay, so we're going to put our month here only on the top line. Then we have another column here, and this is going to be for the date. So when we did our mastery problem or when we did our test, they had a transaction and it said it was March 3rd. So what you did is you put in parentheses 3 to indicate the date. What we'll do is we'll put the date right here. Every transaction has to have a date. So that might mean you may have multiple transactions on July 20th. So you might have the 20th and the 20th right next to each other. That just means they're two separate ones. Because I could receive cash from a customer and I could pay for supplies on exactly the same day. Businesses are going to have multiple things happening that they would have to record. So we always go through, they're going to be listed in date order or chronological order. Okay? So when we're going through and recording it, you want to put it in the same order that it's listed within our directions. Okay? So what you will find is the oldest will be on the top and then the newest would be on the bottom of your journal page. So the next column here is, notice it says account title. Okay, we're familiar with accounts. We've been doing a lot of things. So if I was going to say, give me an asset account, you would say supplies, cash, prepaid insurance, accounts receivable, correct? All of those are account titles. We also know that advertising expense is an account title. So right here, we would go ahead and type in an account title. This column right here is our document number. This is called our source document. What has to happen in order for anything to happen is there has to be some proof of it. I can't just go in and say that I received $7,000 from my business. Think about it. If I buy something at Don's, let's say I buy peanut M&Ms, I go through the cash register. I pay for it. Don's give me the peanut M&Ms and what? A receipt, right? That receipt is proof to Don's that they received cash from sales. Agreed? So that's a source document. And if I were to pay for supplies at Best Buy, I would write a check. Agreed? We're paying with my debit card. In here, we're going to use a lot of check numbers. It just makes our lives a little bit easier. So I'm going to write a check, and a check is going to be a source document for money going out. So you will find we have various source documents, and the source document is going to clue you in onto what happens. I'll give you a hint. Anytime you write a check, cash is being credited. C check, C cash, C credit. Agreed? Cash is going down. If I write a check for somebody, I have less cash. The downside of cash is a credit. Okay? So what will go in my source document is going to be a letter and a number. The letter would associate to a receipt. So for example, if it was a receipt, it would be R, and then after it would be a number, 7, meaning it's the 7th receipt. Now if you look, I just happen to have a Don's receipt here. On the very top of Don's receipts, they have a really long number. That would be the receipt number. Now, does Don's go through and record each individual transaction individually? No, they would go through and give a total at the end of the day. But still, every receipt would have a receipt number. If you ever pay me money for FBLA, one of the things that I always do is write out a receipt and give it back to you, because that's also my proof of payment of making sure that I have all my money going in and out. So we'll have a letter, a C for a check, an R for a receipt. There'll be other ones that we'll learn about, and then a number to indicate it. And what it also shows you is I can't go from receipt 7 to receipt 12. I should have receipt 8, 9, 10, and 11. And if I was missing it, that would give me a clue of I should go look for something. Okay? Now, I'm going to tell you right now, this column right here that says post-reference, I have one chapter that we learn about this whole entire column. So right now, just know you don't need to know anything about it yet. So this whole chapter, this column will stay blank except for one small exception, but I'll teach you that. Okay. Now, when we get here, this is where numbers go. And when we look at the numbers, I want to point out that these columns are set up so on this far right-hand side here is going to be your cents. And then you have your hundreds, and then you have your thousands. So it will go through and it will line it up. Now, most of the time we're going to find in our happy accounting land, our cents, they have it set at 0. And they do that for a reason at the beginning of accounting, is it's much easier to add up whole numbers than it is with decimals. Okay, so just to know that we have our cents, our hundreds, and our thousands going all the way across here. Now, when we look here, I really truly have 5 columns for where I can put transactions. This first one right here, if you kind of look, doesn't this even look like a T account? Left is debit, right is credit. Okay, up above here I have this word called general. Okay, I'm going to move on to the next column and that will make more sense. This one right here, notice, I don't have a T account, do I? It just says sales credit. And then I move over here and I see, cash. I have a T account and I have a debit on the left and a credit on the right. These last 3 columns are our special columns. This is a general column. Why do you think these are special and that is general? That's how you set it up. But what's different? What's different about my general versus my special? What's that? Sales. That's one big thing. What else do you see over here in my special? Besides sales, you see cash. Cash and sales are what? Not a classification. It is a what? No, that's a classification. Cash and sales are, what did I write over here, 1 through 5? What are those? They're words, yep. Account titles. Would you agree? Sales is an account title. Cash is an account title. Do we have an account called general? No, we don't. That's why these are special, because they have an account title associated to them. The only thing I'm going to put in this column is sales. That is so powerful for me as a business, because I'm going to have one column for the month of October, and at the very bottom it's going to give me a total that says how much sales I had. That's powerful. Businesses make decisions when they know what their sales are. Now here, we're doing the same thing, but cash has a debit and a credit. Sales only has a credit. Why? I kind of told you a little bit ago. It's only going up. Right now in our happy accounting land, people don't return things. Right? So the only thing we're going to do is affect sales as a credit. Now, we know cash will go up or cash will go down, depending on what's going on, right? So we have two columns here. The debit side is going to be when cash is increased, and the credit side is going to be when cash is decreased, because cash is an asset. Assets are on the left side of the accounting equation. So this is how we record transactions now. We're going to go ahead and take it from a T account to our journal. We had to learn about T accounts in order to understand what debits and credits are. But it's more cumbersome to record it in a T account than it would be in our journal here. Now, we know every transaction is going to affect two accounts. You can never just affect one account. So if I were to say receive cash from owner as an investment, what's the first account you hear when you receive cash from owner as an investment? Cash. My question to you, is there a special column for cash? So that amount will go here as a debit or credit? Debit. What was the other account that you heard and received cash from owner as an investment? We don't have an account called investment. Owner's capital, whoever the name. Now, so do we have a column here that says the name of the owner and the word capital? We don't. So guess where it goes? General, right? It's going to go here. And if we put something here, we have to write the account title there. So I would write Mrs. Grasso Capital here, and then I would do a general credit and a cash debit. We always affect two accounts. So the first one you heard was cash, so we know that we're going to put cash here as a debit. The other account you said was Mrs. Grasso Capital, but I don't have a column for Mrs. Grasso Capital, so I have to write here Mrs. Grasso Capital, and I put it under general as a credit.
So say you affect cash and sales, you still have to write an account.
No, that's the one exception where you don't have to write something there because you're affecting two special columns, and I'll show you how to do that. Did I blow your mind a little bit? A little bit? Not as much as T accounts and debits and credits, though? Okay, ready to try this? So I wanted you to see and talk about all the columns before we try to put transactions in it, because putting transactions in it is much harder. So our directions read, our journal is given below. Your instructor will guide you through the following example. Norm Dermer owns Dermer Copy Center, which uses the following accounts, and they're all listed there. So we have transactions. April 1st, April 2nd, and then I'm going to read the directions. The directions say, journalize each transaction completed during April of the current year. Use page 1 of the journal. Source documents are abbreviated as follows. See, check, our receipt. I talked about those. So we know a receipt means cash is going up. A check means cash is going down. So our first transaction reads April 1st, receive cash from owner as an investment. Okay, stop right there. The first thing we got to do before we record anything is get our month on here. So I'm going to go ahead and record in April APR, maybe. Now, the other thing it says is we're using page 1 of a journal. Look right here. This is important, especially when we get to our next chapter, but it's already pre-printed on there. So the first page for a business would be page 1, and then the next page would be 2, 3, 4. So you would always have consecutive page numbers where it goes up. Now, ideally, we already said that each month has its own page. But some months could be bigger, and you might take 2 pages. Okay? So our transaction reads, receive cash from owner as an investment, $1,500 R1. I always move on my journal from left to right. The first thing that I'm going to do is put in the date, and the date is the 1st. Oops, not 01, just 1. Now, I kind of gave you this as an example. Receive cash from owner as an investment. We already said the first account you hear is cash. Is cash going up or down? Up. So I'm going to go ahead and do my cash up, which is cash debit of $1,500. I don't need to put cents in. If I do 1500 and hit enter, it puts in a .00. What was my other account? Yeah, it is going to be the name of my owner. And in our directions, they gave you all of the accounts that you could use. Okay, so we're going to go ahead and use Norm Dermer Capital. My source document is going to be R1, standing for Receipt 1. And Norm Dermer Capital is going under General as a debit or credit? Credit. Because I still have to have a debit and a credit. Now the second, paid cash for supplies, $375. I'm going to start with the date of the second. What are my 2 accounts that I'm affecting? Caleb. Paid cash for supplies. Cash and supplies. So Caleb, is there a special column for cash? Is there a special column for supplies? So I asked myself that question, and then I'm going to write under account title right away, supplies. What was my source document? C1. C stands for check. C check, C cash, C credit. If you remember that, that will help you enormously, because you know that cash is being credited $375, so therefore that tells you supplies must be debited. Whoop, whoop, I got a perfect. Anyone else? Same? My advanced class right here. Try you're on your own.